Namaste, welcome to Arthneeti courses. In today's short course, I am going to concentrate on tax benefit options which are available for salaried individuals. Now, this course is specifically targeted for new earners, people who have got new jobs, who have started earning salaries. Say they are into their first job and do not have any background or knowledge about taxation. Now, once you start earning money, income tax becomes an integral part of our earning journey. If you are from a North commerce background and if you do not know the details of income tax, it would become very difficult for you to take advantage of the various tax benefit options that are available in the Income Tax Act, because of which you can reduce your income tax liability. Now, income tax generally is seen as a punishment. People tend to complain about even about how even after paying the taxes that are due to be paid, uh, the what can we say, the quality of infrastructure that the government provides is not up to the mark. Now, this is not the case only in our country, but it is the case world over that people crib in such a fashion. But one thing that we should always remember is the taxes that we pay become revenue for the government. On the basis of these taxes, the government spends money on building infrastructure for the development of the country. It runs various schemes for the poor and people living below poverty lines, like giving free ration or free medical aid in government hospitals. It gives salaries to government employees on the basis of the revenues collected from such taxes. Right now, income tax is one such tax that the government collects. Right, according to recently published data, income tax form the percentage of the total tax collection, of the total revenue that the government collects. Income tax collection is nearly 28% of that total revenue. So, income tax forms a significant portion of government revenue. This, when not many people, it is always said that the kind of cars and the kind of travel that people undertake and the assessees or the people who pay taxes, who file their returns, there is a gross mismatch in the same. But uh, with salaried class, what happens is tax is normally deducted at source and then salaries are paid in the hands of the employees. So, tax evasion when it comes to salaried individuals is near to zero, correct? But what happens is when we pay such taxes, obviously we are in a way giving a helping hand in nation building. So I urge you to not look at income tax as a way of punishment, but a responsibility that we have to undertake as citizens of this country, and a way and a contribution on our part in nation building. Correct? Right. Now, under the Income Tax Act, there are various provisions through which you can reduce your tax burden. See, we earn money, we work hard, we earn money, and part of it we have to pay to the government. Correct? Even though it is your responsibility, you take it up as a helping hand towards nation building, all that is fine. Correct? But taking advantage of the various tax benefits that the Income Tax Act has provided for is very, very necessary. Because of those tax advantages, what happens is your tax burden can significantly come down. So, knowledge of those tax beneficial or tax saving options is utmost necessary. If you are a new earner, this knowledge or having such kind of a knowledge, if you are not from that particular background, is obviously you cannot have all that knowledge. So this course basically aims to give you a hands up, um, a heads up, so to say, into the various payments or various kinds of incomes that you receive in a given year, uh, that you can deduct from your taxable income and reduce your tax burden significantly. So this knowledge is very, very necessary for all the people who earn money and pay taxes. New earners who do not have any idea or who are new to paying taxes, this course is going to be very beneficial for you, because you will be able to understand that the various payments or transactions that we undertake in a given year, how we will be able to benefit by claiming them as a tax deduction from our income tax statements. Correct? So let us start with the course. See, the course is going to help us knowing what tax benefit is. Then we will start with the various tax slabs. Then we will look at the tax benefit which are available as per the Income Tax Act, and what is the benefit of tax saving or tax planning. Correct? Right. See, for people who have absolutely no knowledge about taxation, how it is levied, simple, in simple terms, what is income tax? Tax on your income, correct? It is not only levied to salaried people, but it is also levied to business persons or entrepreneurs who earn income by way of profits. Correct? Now, income tax is basically targeted towards income which is non-agricultural income. So agricultural income in India is tax free. So if you have an income from non-agricultural means, you will have to pay income tax to the government of India. It becomes, as I have already told you, a source of revenue for the government. On the basis of the revenue that the government so collects, it takes up various infrastructural development projects, various schemes for the poor and downtrodden. Like in case, if you remember, during Corona times, the government provided for free vaccination. A ration was given to people living below the poverty line. I think the ration is still on, right? How do they pay for all such schemes? The various subsidies that the government gives, how do they pay? How do they make up for these subsidies? It is through the revenues that the government collects from taxes like the income tax, GST, customs duty, to name a few. Correct? So it becomes a source of revenue for the government. Right. Now, all this we have seen, I have told you, look at it as a duty, look at it as a duty of a responsible citizen, and pay taxes by taking advantage of all the tax deductions that the law, that the Income Tax Act provides for, and then fulfill your moral duty of paying taxes to the government. Right. Now, income tax slabs. Now, what are slabs? I told you income tax is a tax on income. Now, depending on the level of your income, there are different income tax slabs which are levied by the government. First and foremost, what is needed to be kept in mind is, if your income is below 2,50,000 per year, if you earn below 2,50,000 per year, there is no income tax. The income tax that you have to pay is zero, right? See, mostly in case of new earners, your salary starts at a low level, and then as you progress in your careers, as you get promotions and salary rises, you start falling into the various brackets wherein a higher tax rate would be applicable. Correct? So, most of the times what happens is, if your salary is say just above 2,50,000, say you earn a 3 lakh rupee package at the beginning of your career, and the amount of tax deducted would be minuscule, and it would hardly matter whether tax is deducted or whether you save tax or no tax is deducted at all. But understanding these tax saving options and taking advantage of those options will help you habituate in tax planning. You are not going to be earning 3 lakh rupees all your life, correct? Even if you start with that salary, obviously you are going to progress in your careers and your aim is to earn higher and higher. Why? Because as life progresses, our responsibilities change, our needs change, and we need more money to fulfill those responsibilities and needs, correct? So as our income starts rising and we start falling into higher tax brackets, tax planning and tax saving plays a very important. Now what happened is, and the government introduced a new tax regime in the year 2021. Right now, under this new tax regime, an individual could either opt for this new tax regime or he would go along with the old tax regime. Under this new tax regime, what the government did was it had significantly reduced the income tax rates but taken away major deductions which were available under the Income Tax Act. So, if an individual was opting for the new tax regime, he would have to pay tax at a significantly low rate, but then he or she would not get benefits available under the Income Tax Act, right? So this is what the government did last year. And it is an option given to the individual to choose whichever tax regime is suitable to the individual, right? Now, these are the tax slabs as per the old and the new tax regime. Now, see below these tax slabs are for individuals below 60 years, since this course is targeted for new or earners. The age is obviously going to fall in this bracket. Now, see for income up to 2,50,000 rupees under the old tax regime, which is the existing tax regime, and the new tax regime, there is no tax. So you will have to pay zero tax if you have an income below 2,50,000. Now there are different slabs in the existing tax regimes and the new tax regime. Let's look at the existing or the old tax regime first. Now for income above 2,50,000 but up to 5 lakhs, the charge is going to be 5%. The income tax rate applicable for income which falls in the bracket between 2,50,000 and 5 lakhs is 5%. Above 5 lakhs till 10 lakhs, the charge is going to be the basic 12,500. Yes, plus 20% above 5 lakhs. What is 12,500? See, if you calculate 5% of 2,50,000, you will get a figure of 12,500. So, that 12,500 plus 20% for any income that you have above 5 lakhs. Correct. Now, if you have an income above 10 lakh of rupees, the basic 1 lakh 12,500 plus 30% will be charged on all your income above 10 lakhs. Now, these are the various tax slabs as per the old tax regime. Let's look at the new tax regime. Now, as per the new tax regime, as we said earlier, up to 2,50,000 rupees, there will be no tax. Now, from 2,50,000 to 5 lakhs, the tax rate is same as the old tax regime, which is 5%. Now there is a difference after this. From 5 lakhs to 7 lakh 50,000, the rate will be 10% plus the 12,500 on income on the first 2 lakh 50,000 rupees of your taxable income plus 10% of any income which is above 5 lakhs. Correct? The next slab is from 7 lakh 50,000 to 10 lakh rupees, wherein initially you will have to pay 37,500 plus 15% on any income above 7 lakh 50,000. So on and so forth, right? The highest tax starts at 15 lakhs and above, wherein you will have to pay 1,87,000 87,500 plus 30% of any income that you have above 15 lakhs. So as per the old tax regime, the highest rate of tax, which is 30%, starts at your income above 10 lakhs. But as per the new tax regime, you will have to pay 30% tax only once your income has reached above 15 lakhs of rupees. Correct? Now add to these tax rate, add surcharge and the cess that the government has levied on your income tax rates. So what you pay is a little higher than the tax rates mentioned in this slide. Correct. Now tax benefits. Now as I told you, when you calculate your liability for paying tax under the various sections of Income Tax Act, there are various benefits that an individual can avail. Now let us look at those benefits one by one. Under the first benefit is under section 24B. Now these sections are for the Income Tax Act 1961. So as per that act, under section 24B, deduction is available on interest paid for housing loan or house improvement loan. Now say suppose you are like some renovation work, like renovation work is carried out in your house and you take up a loan for that renovation work. Yeah, the interest part that you pay on that housing loan is available for deduction under the Income Tax Act. Right now, there are two categories to this. Firstly, self-occupied. If you are staying in the house, then rules are different. And if you are staying in a rented accommodation, then the rules are different. Correct? Before we go on to the various deductions available, one thing that you should know is for self-occupied property, maximum deduction of interest on housing loan is 2 lakhs. Now, this is not available under the new tax regime. Correct? Right. Now, let us look at the various deductions for interest on housing loans that are available under this section. Now, for self-occupied properties, where loan, look at the columns. One, it is self-explanatory where the loan was taken on or after 1st April 1999. So, if you have bought a house property where you are staying yourself and you have taken a loan after 1st April 1999, either for construction or outright purchase of that house property, then interest of up to 2 lakh rupees is available for deduction till the time the housing loan is repaid. So any interest that you pay on your housing loan for the year up to 2 lakh rupees is available for deduction. Correct? Now, if you have taken a loan for repairs and improvement of the housing property which you are staying in, and this has happened after 1st April 1999, a maximum allowable limit for reduction is 30,000 rupees. Correct? Now, for loans that are taken before 1999, either for construction or renovation work that is undertaken, a limit of 30,000 rupees is allowed as deduction. Correct? So, like I hope you are clear on this. If you are staying in a house that you have purchased and you have taken a loan after 1st April 1999 to purchase that house where you yourself are staying, you can get tax deduction, tax benefit on the interest part of your repayment up to 2 lakh rupees per year. Now, if you have taken a loan for house improvement or renovation work in your house after 1st April 1999, you will get a tax benefit of up to 30,000 rupees. Correct? Now, the limit is also 30,000 for any loan for purchase of house property or renovation which is taken before 1st April 1999. Correct? Now, let out, if you have given the property on rent, uh, and the loan, like if you have taken a loan and if you have let out the property and you have taken the loan for construction or purchase of the house, actual value of the interest that you have paid is available for deduction. Now, this is what the law states, right? Correct. Let us go on to the next section. The next section is very, very important, and most of us know about this section, but there are various kinds of payments that you do under this section, wherein you will be eligible to claim deduction of up to 1,50,000 rupees. Correct. Most of us know that section 80C relates to tax saving investments that we undertake during any financial year. Now, along with tax saving investments, LIC premiums, life insurance premiums, not only to LIC but private insurers as well, wherein you have purchased, say, a term policy or an endowment policy which insures your life. Yes, the premiums that you pay are eligible under this section. Any contribution to Provident Fund uh, again is eligible as deduction under this section. Tuition fees that you pay, say, for up to two of your children, is again the, can be clubbed up to 1,50,000 rupees to claim deduction under section 80C. So any tuition fees that you pay, um, up to two children, right? You can claim as deduction with a maximum cap of 1,50,000 rupees. Subscription to certain equity shares. Now, what kind of equity shares, if you subscribe to them, can be eligible for deduction under this section? Well, the subscription to equity shares of PSU, public sector undertakings, which specifically mention that they are available for deduction under section 80C, you can get the benefit under this section. National savings certificate, yes, amount that you have invested in NSC is also can be combined with other amounts to claim a maximum deduction of 1,50,000. Now, for housing loan interest, deduction is available under section 24B. For housing loan principal part, correct, you can claim, you can combine it with the other payments that you have made under section 80C. So what this section says that all these various payments that you do together, you can get deduction up to 1,50,000 rupees. Correct. Some other items like tax saving FDs, where there is a lock-in period of 5 years, or equity linked saving schemes like mutual funds, where with ELSS schemes, wherein the lock-in period is 3 years, or ULIP plans, unit linked insurance products, where you invest money, are all like together can be clubbed to get this deduction up to maximum 1,50,000 rupees. Now, along with these various payments falling under section 80C, you can get deduction. You can combine any annuity payments that you do for LIC or other insurance companies towards pension schemes. Right now, pension schemes by UTI, LIC, and annuity is annual payments that you make to these pension schemes. You can get deduction, or these can be combined for a total deduction of 1,50,000. Now, pension schemes of central government, like National Pension Scheme is a very popular pension scheme run by the central government. Atal Pension Yojana, APY, like can be opted through the NPS, and any payment that you do to Atal Pension Yojana is, or can also be combined to get benefit under this section. Now, take section 80C or 80 triple C or 80 CCD1, all these together, for all the payments that you have made under the various heads that I have explained to you, you can get a total deduction of 1,50,000. Right? So say suppose you have paid an insurance premium of 20,000 rupees, another 30,000 rupees you have deposited in your provident fund, and you have invested say 25,000 rupees in a ELSS mutual fund scheme. So the total, what is the total? Sorry, 20,000 rupees for your life insurance premium, 30,000 for your provident fund, and say 25,000 for your ELSS. So a total of 75,000 rupees you can claim as deduction under this scheme. The maximum limit is 1,50,000. So up to that amount you can club all these figures and claim benefit, claim deduction under the Income Tax Act. These deductions are not available to you if you choose the new tax regime, where the rate of taxes are significantly low. Now, if you choose that tax regime, then these benefits are not available to you. Correct? Very, very necessary to remember. Right. Now we'll go on to the next section, section 80 triple C 1B. Now deduction towards various payments made to pension scheme of central government, excluding deduction claimed in the above. Now wherever you have claimed deduction under section 80 CCD 1, yes, you cannot claim the same deduction under section 80 triple C IB. Understand? Where Atal Pension Yojana is available to be clubbed into the 1,50,000, you cannot claim deduction for any payment made to Atal Pension Yojana under section 80 CCC IB. Correct? So, wherein you have claimed the amount for which you have claimed benefit under section 80 CCD 1, you cannot claim the same benefit under section 80 triple C IB. Understood? Yes. Let's go on to the next. Now, deduction towards contribution made by the employer. Now, what we were talking about previously is our contribution as employees, but where employer is contributing to the pension scheme of the central government, deduction is available as such. Now see, if your employer is a public sector undertaking or state government, then deduction up to 10% of your salary is available for tax benefit. Correct? Now if your employer is central government, then you get a deduction of up to 14% of your salary. Now these deductions are available under the new tax regime. All the previous tax benefits that we spoke about are not available under the new tax regime, but deductions under section 80 CCD 2 are available under the new tax regime. Right. Let's go on to the next, 80D, deduction for payment made to health insurance premium and preventive health checkups. Now see, health insurance, like life insurance, is one of uh, an important factor that we need to consider for our yearly investment plan. For salaried individuals, most of the times their employer takes care of their health insurance needs. But what happens is, in current times, the kind of job losses or the frequent changes that happen in our jobs, uh, the steadiness of the job is no more present, correct? So it is always advisable that along with the employer, along with the health insurance cover that your employer provides, it is always advisable that you have a health insurance cover of your own. Why am I saying this? See, once you stop working, say later in your life, at that time, your health insurance cover that the employer was providing you will no more be available. But then, as your age, as you become older, the chances of like needing a health insurance are more, correct? At that time, if you go in to buy a new health plan after you have finished working, after your working life ends, and if you like intend to go and buy a new health insurance plan at that time, at that stage in your life, it is going to be very, very expensive, right? So like if you start early, the premiums that you have to pay are also going to be less, and it will be an additional safety, a safeguard to fend for any medical expenses that may occur in our lifetime, correct? So it is always advisable that you have a health insurance cover early on in your careers. Now, any payments that you make to get such health insurance plan, those premiums are available for deduction under section 80D. Now, how are those available? We will see. See, for yourself or your spouse or dependent children and for your parents, what happens is you get up to 25,000 rupees of tax benefit for any premium that you pay. Now, for preventive health checkups, what happens is 5,000 rupees is available as a sum on which you can have tax benefit every year. So for insurance premiums, you can have to buy an insurance health insurance plan, you can get up to 25,000 rupees of tax benefit. And for any health checkups, preventive health checkups that you have done during the year, you can get tax benefit up to 5,000 rupees. Now, this figure of 25,000 rupees is inflated, is doubled in case any person is a senior citizen. Correct? Now, deduction towards medical expenses incurred on senior citizens, if no premium is paid on health insurance, is 50,000 rupees. In the sense, like if you do not have a health insurance cover but you undertake medical expenses, then up to 50,000 rupees you can get as tax benefit. Next, let us come to section 80DD. Now, under this section, medical expenses for treatment of a disabled dependent, you can get benefit for any expenses that are incurred for medical treatment of a disabled dependent. Now, what are these benefits? A flat 75,000 rupees is available for a person with disability, irrespective of whether you have incurred expenses below or above this limit, correct? So even if you have incurred say 40,000 rupees of expenses, you can get a flat 75,000 rupees deduction. For a person with a disability of 80% and above, a deduction of flat 1,25,000 rupees is available under this section. So section 80DD is available, is regarding medical expenses for disabled dependents. Correct. The next section, 80DDB, is for medical treatments of specific illnesses. Now, a list of these specified illnesses is available in the Income Tax Act. To name a few illnesses like, say, Parkinson's disease, motor neuron disease, or dementia, wherein your earning capacity significantly reduces, any medical treatment expenses for such illnesses is available as deduction up to 40,000 rupees. And where the assessee is not a senior citizen, and up to 1 lakh rupees if the assessee is a senior citizen. Correct. The next section 80E is available for educational loan. Now, interest that is paid on educational loan for self or a relative, say you have taken a loan for your child or your sibling, the interest that you pay on such a loan is available for deduction under section 80E, and there is no cap, there is no upper limit. Whatever interest that you pay on educational loan, all is available for deduction under section 80E. Next is section 80AA. I'm sorry, 80EE. Now 80EE and 80EEA again relate to interest on housing loan. But then a question should pop up in your mind that if we have already seen section 24B, under which we can get benefit of interest paid on housing loan, how come there are two more sections? Well, these two sections, 80EE and 80EEA, benefit under these sections can like you can get benefit from these sections over and above the benefit that you get under section 24B, right? So under section 24B, if you have got a benefit of up to 2 lakh rupees for the interest that you pay on the housing loan, here you will get over and above that 2 lakh rupees, you will get extra benefits under these two sections. Now this was basically done by the government to provoke people to buy houses, as like it would also help in making strong the reality sector, which had seen a significant downturn during COVID, and major boost, like these sections were introduced to give a boost to that particular sector and provoke people to buy their own houses. Now, what are these? What are the provisions of these sections? Well, under section 80EE, what happens is limit, like you can claim further interest up to 50,000 rupees on loan that you have taken to purchase house between the year April 2016 to March 2017. So this 50,000 extra deduction that is available is over and above the 2 lakh rupee deduction available under section 24B. Now the next section, 80EEA and 80EE, like both these sections are available to first time home buyers. Now if you are buying your first home and taking a loan to buy that home, these sections, these extra deductions are available to you. Under section 80EEA, what happens is if the loan is sanctioned between April 2019 or and March to 2022, and you have not claimed deduction under the previous section 80EE, you can claim deduction up to 1,50,000 rupees over and above the 2 lakh rupees that you get under section 24B. Correct? So both these sections are additional benefits of on interest on housing loans that you have taken. Correct. The next section, 80EEB, is for interest on loan taken for purchase of electric vehicles. Now, all of us know that there is a change in our government policy to reduce dependence on fossil fuels and bring more and more alternate sources of alternate energy into the mainstream. Now, this section basically was introduced to like again provoke people to buy electric vehicles. Nowadays we see that there are many electric two wheelers which apply the roads, and there are many four wheelers as well which which are coming out with electric options, hybrid fuel options, right? So this particular section deals with benefit that you can get on the interest that you pay on loan taken to purchase electric vehicles. Now this deduction is available up to rupees 1,50,000 rupees. So any interest that you pay on a loan that you have taken to purchase electric vehicle, 1,50,000 rupees of that interest is available for deduction under section 80EEB. Next is section 80G. Now 80G relates to various donations that are paid to, say, funds and charitable institutions, and how these deductions can be availed. Now there are two categories, okay? One where you can donate up to any amount, there is no limit, and the other is subject to 10% of your gross income. Like if you donate up to 10% of your gross income, you can get a deduction up to that amount. Now some of these payments, for some of these payments you will get 100% deduction, and for some you will get 50% deduction. Now the list of funds and charitable institutions, NGOs, is available in the Income Tax Act, and on the basis of the payment that you have made to various such organizations, you can claim deduction. Now all of us, like in our own way, try to pay back to the society, make like for the upliftment of the downtrodden, even if in our own personal capacity, sometimes with the like busy lives that we lead, it becomes impossible to personally help out in some social, for some social causes, and many people tend to donate money to various such organizations as a way to chip in to for social upliftment. Now all these donations that are made are available for reduction under section 80G. You need to check the Income Tax Act site, and for the list of various funds and charitable institutions where you can get deduction under section 80G. Correct. The next section, 80G. Now this section is regarding rent paid for house, but again, whom is it applicable to? Where HRA does not become part, is not a part of your salary. HRA is house rent allowance. Right now, when a house rent allowance is not part of your salary, the rent that you pay, say suppose you have your your own house in another place, and for work purposes you have shifted to a different location wherein you have rented a house and are staying in that rented house. Now if HRA does not form part of your salary, the rent that you pay for that house is available for like gives you tax benefit. Now how is the tax benefit calculated? See, there are three options, and the lowest of the three is available to you. Correct. Now, what are the three options available? Rent paid is reduced by 10% of your total income. Yeah, before you reduce that rent. Correct. So, rent paid. Say, suppose your total income is 1 lakh rupees, and you have you pay a rent of 10,000 rupees every year. Now rent paid is reduced by 10% of your total income before that deduction. Now what is your total income? Say your total income is what, 1 lakh per month, and you reduce the rent by 10% of that figure, and the lowest figure is available. So in this case, you will not get any benefit because you pay 10,000 rupees rent and the rent is reduced by 10,000. Correct. See, lowest of the three. So first is rent paid, which is reduced by 10% of your total income. Second is 5,000 rupees per month, and third is 25% of your total income, excluding long term capital gains and short term capital gains uh, that you have made, right? So least of these three, whichever sum is applicable, is available to you under section 80G as tax benefit. Correct. Let us look at the next section. Next section is section 80Ga. Now under this section, donations that you have made towards specific scientific research and rural development, say afforestation, like planting trees, or universities or colleges which take up scientific research work, and you donate some money to such universities and colleges, full amount of such donations is available for deduction without any cap. Correct. So again, a list of such institutes is available in the Income Tax Act, and you can get benefit if you have donated amounts towards such causes. Right. The next section is section 80GC. Now, this is for donation made to political parties and electoral trusts. Now full amount is available again for deduction. So whatever amount you pay, donate to political parties, uh, fully you can get deduction under section 80 GGC. One thing, one condition that you have to fulfill is you cannot make payments in cash, and an individual can donate only up to 10% of his earnings. So there is a upper limit which is available for deduction under this section. 10% of your gross earnings. Above that, if you have donated to a particular political party, then you cannot get deduction under this section. Correct. The next is section 80 Now, this is for interest received on bank accounts. Now, see, every quarter, our bank savings bank account earns interest. It ranges somewhere between 3 to 6% depending on the bank. Now, the interest that you earn on your savings bank account, deduction up to 10,000 rupees. So, there is a cap. So, 10,000 rupees of interest that you earn on your savings bank account in a financial year is available as deduction under the Income Tax Act. So any interest that you earn above 10,000 rupees will not get this tax benefit. It will be added to your taxable income. Correct? The last section is section 80U. What is this? This is for individuals with disability. Now, people who have disability and are earners who earn income. Now, this benefit, this section is for those people. What is the benefit under this section? See, a flat 75,000 rupees is available for deduction where a person is disabled, and where the person is severely disabled, in the sense the person has a disability of 80% or above. A flat deduction of 1,25,000 rupees is available under section 80U. Right? So these are the various sections under which you can get tax benefit. You should take advantage of these sections of the various payments that you have made, and try and reduce your tax liability as much as possible. Correct? Okay. So we have seen the various sections, we have seen the various provisions in the Income Tax Act wherein you can take advantage and save tax. Well, why is tax saving so important? See, at the beginning of this lecture, I had told you that say when you start earning your salary may be on a lower side, right? It may just cross the threshold of 2,50,000 rupees, and minor amount of tax must be getting deducted from your salary. But as you progress, as your income starts increasing, tax saving becomes one of the major, should rather become one of the major focus points when you have to pay taxes. Correct? There are various benefits that tax planning or tax saving has, and let us look at those benefits one by one. Now, the first major benefit that tax saving gives is it helps you save for the long term. Like, say if you invest in a ELSS, an equity linked saving scheme, there is a lock in period of 3 years. You cannot remove the money, you cannot withdraw the money from that investment. If you put money in a tax saving fixed deposit, there is a lock in period of 5 years. You cannot withdraw money up to that limit. Say investment in PPF has a lock in period of 15 years, right? There are provisions wherein you can pay part withdrawals, but the lock in period is 15 years. What all these investments help to do is they help to keep your money invested in for a longer period of time. Correct? The more you remain invested, the benefit of compounding sets in, and your investment grows multifold. Albert Einstein, the famous scientist, has famously said that the compounding is the eighth wonder of the world. Correct? So, if you want to take advantage of compounding, be invested for a longer period of time. The more you remain invested, the more benefit you will get out of the compounding effect. And tax saving with the kind of instruments that are available, uh, like you remain invested for a longer period of time, thus automatically you get that advantage of compounding. It helps to grow your investment corpus multifold. Correct. The second benefit of tax planning and tax saving is it helps to inculcate within you a healthy habit of setting aside money which you would put in tax saving instruments. Correct. At the beginning of the career, like if no tax is getting cut and if you ignore tax planning, once your income starts increasing and your tax starts getting deducted, if you do not get into the habit of tax saving and tax planning, you are unnecessarily paying more tax to the government. You are not taking advantage which are lawfully available to you, and you are not putting aside that money that otherwise you would have put aside for saving taxes. Correct. So start early, start as soon as you start earning money, even if the tax that you pay is small, but inculcating that habit is what is necessary. Like you go to work every day, think of this as an yearly program wherein you have to put aside a certain sum of money towards tax saving instruments. Correct. The third benefit is it would help you to build a corpus, say at some later stage in your career, uh, like if you get married, or if you plan to buy a house, or even if you are thinking of taking up a housing loan, or like enrolling for a course which will need a major chunk of money. If you have started investing early on in your careers and you have remained invested for a long term, the corpus that will be built will help you fulfill those responsibilities and needs that may arise later in your life. Correct. So the earlier you start, the bigger the corpus you will build over a longer period of time. Correct. The fourth benefit is of tax saving and planning is the understanding of the various payments that you do, say like payments towards tuition fees, or interest on loan taken to buy an electric vehicle. Like such payments that you make, you can easily avail tax benefit if you have knowledge that such benefits are available to you. Correct. If you do not know the way in which you can save tax, then you cannot take advantage of such benefits. So understanding the various provisions of law, what changes occur in the budget every year, and how they are going to impact your tax saving is very, very necessary. Correct. So this course was is aimed rather to help you get a rough idea about the various ways, the various transactions that you undertake in a year, which will help you save tax, which will reduce your tax burden. Correct. Lastly, it is like chipping in. It is like you putting in uh, your contribution towards building your nation. Correct. Because taxes that are collected by the government obviously go towards building resources that are needed by one and sundry, by one and all the citizens. Correct. So the more you fulfill your responsibility, the better the government can function, and it can provide for various resources that we need in our daily lives. So in a way, you are contributing towards making your nation more powerful, more resourceful, and uplifting the society as such. Correct. See, before I end this presentation, I want to just put up a quote that don't look at taxes as if it is a punishment. think of it as a responsibility you have towards the society and towards your country. Look at it as a civic duty and fulfill it to the extent that is possible by law. Correct? So, I hope that this short course has helped you understand the basics of the various tax benefit that are available to salaried individuals, uh, especially new earners with no background of taxation, with little understanding of taxation. I hope this course adds value to your tax planning and tax saving. And uh, that's it from me, right? If you have any queries, please feel free to contact me, and I will be happy to help resolve your queries. Correct? Thank you.